Hi there, everyone. This is Tom with Escapeartist, and I would like to welcome you to our conversations with one of our strategic partners, RJ Palano, with Cashflow Properties. RJ started working with us about a year ago, helping our readers better understand some of the exceptional opportunities in the United States for not only investing in real estate, but buying America on sale. And we're talking really on sale, aren't we, RJ?
It has been a phenomenal year, Tom, but nothing like what's going to take place next year. This year was a good year. The foundation is set. But next year, we're going to see an unleashing of foreclosures that we didn't see this year, and the buying opportunities are going to be extraordinary.
That's excellent. We just wanted to make this video for you, just to really give you some nuggets. I talked to RJ beforehand, and we were really thinking about some things that would really help readers position themselves for 2012. I think when we get to the end of the year, like where we're at right now, we reflect on what we've done right, we reflect on what we've done wrong, and certainly, RJ, I'd love for you to share some of that information with the readers to help them really position themselves to understand not only where the market is right now, but where it could be in 2012. I'm not asking you to pull out your crystal ball or anything like that, but certainly I know you've worked with a lot of clients this year. You've heard a lot of different stories. You've heard the nightmare stories, and you've heard the great stories. So why don't we start off by, let's talk about Cashflow Properties. What is the essence of your business, and what's different from your business model than other business models that are out there with people kind of hawking properties? I mean, I know I interviewed a lot of people, and I liked your model the best, but why don't you explain the difference between what you're doing and what other people are doing?
Yeah, but first, Tom, before we start, I just want you to know I do have my crystal ball here today. So what I give you is going to be 100% absolutely accurate.
Yeah.
So here we go. But what separates us from other people, Tom, is we've really focused on one area of the country. And it's not the area that I live in. It would be very easy for me to go in my neighborhood here, which I'm in Tampa, Florida, and buy properties, but this isn't the best area of the country to do business in. So what immediately separates us from other people is most people want to stay in their backyard. Why? It's easy. Their connections are there. Their network of association is there, and it's convenient for them. I don't always take the path of least resistance. I want to do what's right, what's best, and what makes the most economic sense. The biggest mistake that we made, not last year, probably the year before, was we bought houses in 12 different states, from California to Kansas to North Dakota to Illinois, Indiana, Michigan, Ohio, Pennsylvania, Tennessee, North Carolina, South Carolina, Florida, and Georgia. And what we learned from that, Tom, was just incredible. The biggest thing is the distinctions that we were able to make about the value of properties, the cash flow that we could attain, and where the emerging markets in the country are. And by definition, an emerging market is in a market where jobs are being created, where people are moving to, and that has Georgia all over it. The problem in Florida, and most people don't get this, especially and I certainly don't mean to make offense of anybody, but people like in Canada, they like Florida because it's a second home for them, which is a great reason. It's a great place to have a second home. But for investment, it's not the best place in America. And we really feel that Georgia is the best area. So what separates us is we're not afraid to take a shot and go where we don't live and go up there and set up an entire business operation and start and make it happen. So we really, the big thing that's behind us is action. If we really have the courage of our convictions, we're going to do whatever it takes to be successful in that market. And we moved our entire management team, our property management team, up to Atlanta. And then what we've done this year is we started to dispose slowly but surely all those other houses and all those other areas because it's diluting our energy. I don't want to put energy in North Dakota or in Illinois except to get rid of that stuff because those are markets that are absolutely clearly not emerging. The demographics in our country has changed tremendously. And you and I have had this conversation before when we talked about the manufacturing jobs. You know, we used to live in a very industrial nation back in the 60s. 54% of our jobs were in manufacturing. That's why the population explosion was so great up in the Northeast and in the Midwest. Yeah. Today, 9%, just 9%. So where are the people going? That's where you should invest.
So you made mistakes last year or over the last couple of years, and you've identified that one of those is if you're going to buy, you got to buy in the right neighborhood, correct?
Absolutely. But even more important than the right neighborhood is the right region of the country. Then it's like location, 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 location. Region, state, county, city, neighborhood. And then it's curb appeal. Everything is curb appeal. There's a lot of houses in Georgia that fool people because they're pretty houses, but they're in terrible neighborhoods.
Right.
When I was there even just a few weeks ago, I was looking at some houses that were coming up for auction. And when we drove down the street, I was with my wife and we were driving down the street. We just said, oh my God, let's get the heck out of here. I said, no, I got to at least see what this house looks like. I can't believe that this house is even in this neighborhood. So location is absolutely everything. It always has been for real estate, and it always will be. There's no question about it.
What are the top three things that you look at in analyzing a neighborhood? Off the top here, what are the top three most important things that if people don't buy it through you, if they were going to go buy a house to rent, what would be the top three things?
Absolutely. Number one to me is school systems. Okay. If you're in a good school system, that drives values. People want to be in a good school system. And typically when you rent a house, you typically rent it to a family. If that family cares about their kids, they want to have them in a good school system. Georgia has all different kinds of school systems. It's not like Canada where they're all good. It's completely different. So school systems is one. Okay. And so we check education levels as well. That ties in with the median income. If you're in a low-income area, Tom, it ties into the other aspect, which is crime. And then you also have the percentage of homeowners and renters. There's actually really four things that we really dive in on, and that's the school systems, the median income, the crime reports, as well as the percentage of homeowners versus tenants. That is critical. Then it's a matter of looking at the house. I mean, just because you've got those things, you want to make sure that you're buying a quality property as well. So what we've learned to do, and this is one of the biggest things that I learned this last year, one of the largest lessons that I learned, and it goes in my books of lessons that I've learned in 2011, and that's this. We did so many properties, and I moved very, very quickly. I'm trigger happy. I've got 2 6-shooters on my hip right now. I see a good deal, bang, bang, man. I'm signing it up, and I'm going to close it. But what we found out is this. It's better for me to always get a home inspection on a house when I'm buying it. And that's what we do for all of our investors now. We have a home inspection. They can see the before report and they can see the after report so that they know there's not going to be any surprises, because our investors, they don't want surprises. They don't want to find out in 2 years they got to put a brand new roof on. And to that end, I got a perfect example. I just bought a beautiful house in Douglasville. The back of the roof could have been repaired, and I had an estimate for $1,000. And I decided, no, I'm going to just strip the whole thing, and I'm going to spend $5,200, and I'm going to put an architectural roof on it, and it's going to be beautiful when I'm done with it. Now my investors don't have to worry about that. Or the air conditioning, which it looks suspect, we simply replaced it. Fix the cause up front, and you'll save a lot of problems. Do it right in the beginning. You don't have to go back over and over and try to fix something that you try to get away with a Band-Aid. Very important.
So there's obviously data services online that you draw from. So when you're sitting with an investor, you can actually show them all these numbers and the comparisons in a spreadsheet or something and draw down pretty quickly to discern what area you want to buy.
Absolutely. There's a website out there, Tom. It's fabulous. It's called citydata.com. City, CITY-data, DATA.com. And that provides the statistics that we just talked about. But you know what? Again, it's critical to still go into the neighborhood. Last week I was in Atlanta. As you know, we saw each other, which was...
What time of day? I'm sorry. What time of day would you go in? Are there any specific times of the day you go into the neighborhood?
Well, if I was going to move into a house, I would go there morning, noon, and night. Right. And I've done that when I was going to move there. And now I just go when it's convenient for me to go there. But I can get a pretty good look. But when I'm in the neighborhood, it's always like this. I'm knocking on the door next door on both sides and across the street. I'm trying to get a feel for who's there, and I just come up, hey, I'm thinking about buying a house in your neighborhood, and I just want to let you know we're trying to get a nice family. By the way, what kind of a neighborhood is this? Meanwhile, I'm really evaluating them. They're the neighbors. These are the kind of people that are living here. Is this a motorcycle gang? Is this a Ku Klux Klan? Is this ghetto? What do we have next door? What do we have in the neighborhood? And Tom, that's what most people don't do. See, I'm the guy that's going to ask the questions that other people are thinking about. I'm not shy. What we do is we take their phone number, we give them our number, and listen, if you ever see a problem in our house, we want to know, because this is a great family neighborhood. We want to keep it that way. And we think we got a good family going to go in here, but if there's ever a problem, would you please call us? If they're disturbing the peace, if they're not cutting the lawn. So what we do is we really enlist spies in the neighborhood every time we buy a house, because it's so important to do that. We have a giant spread of where we buy houses. Behind me is a map. I don't know if you can see it. It's behind files. You probably can't see it.
I can see all the pinpoints on it.
Yeah. Well, that is, this is that little loop around Atlanta right here. You live over here. You live down here. Okay. Mm-hmm. And I live over here. But we don't buy in that loop because it doesn't make any sense. It's all old properties, or they're newer properties, and they're very, very expensive. When I say newer, I mean larger, more expensive, hundreds of thousands of dollars, that don't cash flow properly. So you have to know the areas where to go into in Georgia. And the last few years have been a tremendous learning experience. We believe we know right where to be and where not to be. So that's some of the distinctions that we were also able to make in this last year, Tom, is the best areas in the Atlanta region where to buy.
Now, Atlanta's a pretty hot city. I live here, so I know all about it. We've got big corporations here. We've got military bases. We have a strong entrepreneurial community. Anything outside of that, and we have conventions as well, which makes it a popular city. We've got racetracks. During the summertime, I know that the racetracks are a big draw, NASCAR, things like that. Anything outside of that would make Atlanta appealing we got the airport, which is one of the largest airports in the world. So, I think you've said, what are some of the other parameters that were benefits to Georgia in general, or Atlanta?
Well, clearly, Atlanta has the busiest airport in the world.
Right.
And that's not just me and you saying it. That's a statistic. That's a real statistic. Right. Additionally, it's a transportation hub of the Southeast. You have tremendous trade companies in Atlanta. You have Delta there. You have Coca-Cola. You have CNN. You have Rubbermaid. Actually, Tom, you have 75% of the Fortune 1000 companies have operations there. So you have a tremendous, stable employment base. Unlike places like Memphis that are really one-dimensional. Federal Express basically drives Memphis. 30,000 employees from Federal Express. Something goes wrong with Memphis, with Federal Express, you've got one employer that could really wreak havoc on that economic situation around there, because there'll be a domino effect throughout the economy. Whereas in Georgia, even though the unemployment went up a little bit, it went up a tick, but now it's coming back down. That was all due to the building trades, because there was such an explosion in building a few years ago, which is also the reason why there's so many opportunities here today and why it's one of the best places to buy in the country.
Right. Yeah. And what about, I know insurance, water shortages are a big issue in some places. What are some of those factors that help you analyze a market?
Absolutely. Well, you guys had a drought a few years ago. Hey, we had droughts in Florida as well. They got issues out in Arizona as well, because they got to divert water to California, and they got to divert water to Phoenix and make sure that there's enough. It's not unusual. You have some climate changes that happen periodically, but what we don't have is we don't have hurricanes. And that's huge, because the insurance in Atlanta is significantly less than what it is anywhere along the water. When I say the water, I'm talking Texas, Alabama, Mississippi, going down the Florida coast and all the way back up the coastline. When you're near the water, you're going to end up with the insurance rates that are prohibitive. Even my house, Tom, in Tampa, my homeowner's insurance just went up this year from $1,600 a year to $3,600 a year. Now, if I was renting this house, that destroys cash flow. Okay. And that's a fixed expense that doesn't go away. And along that note, in Georgia, most people don't know, and I just got off the phone with an equity fund that's based in Miami and in New York, and we were talking about Georgia, and when I explained to them, look, when you're looking at some of my numbers, the property taxes are going down because there's a law in Georgia on the books that when you buy a house, they reduce the property taxes to the price you paid for it. It gets assessed now at the price you paid. So there's been houses that we paid we didn't pay $250,000, but say sold for like $240,000. We might have got them for $60,000, $70,000, $80,000 in those price ranges. Those property insurance drop tremendously to less than half of what the current value is, which increases cash flow. So they do that for a year, Then every year thereafter, the management company that we use will go appeal them every year and stop them from going up. They'll give them information to keep those taxes as low as possible in order to give the investor a higher cash-on-cash rate of return with their investment.
That's great. Now, tell me about, there's a couple ways I guess you're working with investors. You have some investors that are wanting to buy properties with you and participate with you. That is correct, right?
Yeah, we basically have two models. Everybody's in business to make a profit. And if anybody says they're in business and they really don't care about making money, they won't be in business for long. So every business has to generate income. We generate income by selecting a property, we buy it, we fix it, we sell it, we make a profit on the front side. Then we turn it over to the management company that we help put in place because that's my house right now. I want to make doggone sure that everything goes on right. That's one way. We just make a profit on the front side. That's it. Management company does their thing. We're out of the picture, except we micromanage that because that's the foundation of everything, property management. The other way is we allow people to participate at our prices, and we get a piece of the action going forward from day one. And there's multiple different ways of structuring that. It depends. Everything really depends, Tom, on this. It depends on the goals of the person we're talking to. It's what I call the eye picture. The eye picture. What does this person need? Where are they in life? What season of life? Are they beginners? Are they young in their 20s? Or are they with a family? Are they in their mid-50s and they just, there's no more time for taking chances with your money. Everything has got to be safe. Are they older where they really need just as much of a guarantee as they can possibly get? And then it has to do with what their financial capability is, as well as there's one more factor, and it'll come to me in 1 second. We got to know the resources that they have available. What kind of resources do they have available financially? Right. So everybody's different, and what I try to do is work with everybody on a one-on-one basis. And what we do for them is we give them a strategic coaching session is what we do. And we identify what their goals are, where they are, what they bring to the table. And the other element was also their business experiences, because everybody comes to the table with different business experiences. I know this is hard for guys like you and I because we are totally entrepreneurs who operate without a net. When we screw up, it's on us. There's nobody there to pick us up. There's no government bailout for us. We're entrepreneurs, but a lot of other people, they work for a check. And, it's work for pay. We work for profit, you and I. And, we really want to speak to them on their level to make sure that they're safe. Because the biggest thing that's so important right now, Tom, for people, because there's so much economic crisis throughout the country. Forget the country. How about the world? I picked up the paper today. And by the way, folks, today is December 23rd, 2011. Iraq. I don't know. I think they had about 12 suicide bombers yesterday. As soon as we pull out, they're blowing each other up again. Fascinating. That stuff will all play out in financial markets one way or another, just like the crisis in Europe spills over to us. Right. So the investors that we're looking at and the equity funds that we talk to, they're moving out of volatile stocks and they're moving into real estate in giant, giant ways all over the country. Equity funds are moving their money for safety reasons, predictable income into cash flow houses.
That's great. So let's talk about 2012. What's the future hold for 2012? You just said there's a lot of money pouring into cash flow properties. What's 2012 hold? What are you gonna do differently in 2012 that you didn't do in 2011?
This last year we set the foundation, and we're working up with teams throughout the world right now. Teams in Canada, teams in Australia, teams in China. There's people that are actually coming into Iraq to meet with other investors, of friends of mine that are doing everything they can if they could ever get a visa to get over here. So what we've done this year was lay the foundation. Next year, it's just maniacally focused on buying the best, safest houses, because every day we go by, we either get smarter or dumber, one or the other. And so we try to learn from all the experiences that we've had in this last year. And so we're even more sensitized to the right neighborhoods to invest money in. And we've got equity funds approaching us now to be their acquisition guy because of our knowledge on the streets. And we're simply going to be spending a lot more time. I don't want to say spend. I'll be investing a lot more time in Atlanta, probably the better part of 3/4 of a year living up there and scarfing up the best opportunities that I could possibly find. And these people, these investors, these equity funds, they're looking for a couple things. They want cash flow, which is very important. And the equity funds are so much more sophisticated than your average investor. The average investor looks and they try to make a decision based on comparable sales. And that's really not applicable, Tom, in this market. All the sales out there are distressed sales. And just because a house is on the street and it's 90,000, and if we're selling one and it's 95 on the same street, there's a big difference between mine and that other REO down the street. Sure. Ours is done and it's got the home warranty. So investors are being educated. The equity funds are already there, and they look beyond comparable sales. They're looking at future value. They're looking at the safety of the predictable income stream based on the neighborhood and based on the cash flow that they can attain, because they recognize the fact, Tom, that it's the price per square foot that people are really buying on right now. That and cash flow. Right. And the cash-on-cash rate of return. So much more important. People get confused, particularly the Chinese, when they go on Zillow or they go on Trulia, and they try to make a decision based on information that isn't necessarily accurate without comparing apples to apples. They don't realize that people put properties up there that they're not even available at those numbers. Right. Perfect example. Somebody sent me something from Australia that was marketing. They showed me a house across the street from mine for $40,000. And I called the realtor that actually got me in mind, this one broker that was dealing directly with an asset manager. I said, hey, how could this be? I had that house under contract for 56, and we let it go. How could they have gotten it for 40? They didn't. The realtor just put it up there. It's a realtor that didn't even have a listing. And what they did, Tom, is they do that to attract investors. So the most important thing that I think investors can do for themselves is due diligence. Right. Come and see us in Atlanta. You know, last week when I was there, we had 2 different groups from California, Indianapolis, Panama, Australia, and Massachusetts. These are intelligent people that are coming. They say, listen, I'm going to invest my money, but I really want to see what I'm getting. Yeah, and Canada, too. I forgot about Canada. They're intelligent because they want to see it. They just want to see it. And that's the best advice I can give to anybody. Don't just give somebody your money. Do your due diligence. Come on down there. Check out the operation. I don't care where it is, whether it's me, somebody else. It doesn't matter. But don't be so silly. Don't ever buy a house based on pictures that you see on the internet, because pictures are deceiving. What we do, and I think, and you know this, we take videos of all the houses and the neighborhoods. So you really got a good look at what we're offering for the people that can't make it here.
Okay. RJ, one last nugget before we go. And we're not going to explain why, but Section 8 housing, thumbs up or thumbs down?
Brother, that's the biggest sucker's bet out there. You know,
don't explain why. We'll do that in the next video.
You got it.
We got to leave them hanging a little bit here. You know, we got to say why not, because everybody's pitching it out there, and I see all these hot dog property guys, pitching Section 8, and I know there's nightmares there, and we'll explain that in the next video. I know that you've got a mentoring program that you're putting together for 2012, so you will be taking on some students and strategic partners in 2012, right?
We will probably take on as many as 6 people. And we're going to start it out slowly. This is something that we've never offered before, but there's so much opportunity out there for the people that really want to do it. You know what we've noticed, Tom, is there's so many guys that are out there, and for lack of a better word, I'm going to call them self-appointed gurus. Okay? They're out there. They teach things. They warp statistics and use them to their advantage. And we've run into people that, they've got the $100,000 package of coaching, and they've got the $50,000, they got the platinum or the gold. And you ask them a simple question, and the answer is ridiculous. Well, how many houses did you buy? Well, I didn't buy any yet. Well, maybe you should have taken that $100,000 and bought a house. Maybe you should have taken that $50,000 and bought a house. You're going to learn by doing, absolutely by doing. And so what we do, if we put this thing together, and we're considering it strongly, you've talked to me about this, and we would only do it if we can offer a strong guarantee that they'll make their money back in 1 year. And that's something that I'm going through in my head. And I believe that we can do that. But I got to have the right people, because just because they got money, that doesn't mean we're going to take them. They've got to be the right person with the right mindset, with the right goal set. And they just got to be that, they've got to be ready to take action. And we'll show them everything. There's an old expression. Everybody uses it now on the internet. We'll pull back the curtains. We're going to lift up the sheets. We're going to take them out of the box. We'll just load them up with all the information, but then we'll hold their hand and actually go through and do deals with them so that they get their money back. And we know how to do that as good or better than anybody in the country.
I know I've met some of your staff. You've got a great staff. You've got all the legal documents. You know the whole inner workings of it. So if somebody who's maybe coming out of corporate America or looking to do something more entrepreneurial, this will be a solution. They can interview with you. You can kind of walk them through the ropes to know what they expect. And if you decide to take them on as a student, they'll work with you side by side for a certain period of time.
That's exactly what we're talking about, Tom. And I just got to say this right now. I've been doing this over 32 years. You and I have had this conversation more than once. And in all honesty, no kidding, no joking, if you can't make money in this market, you can never make money in real estate, ever. Ever. I mean, there has never been a better time to buy. But what we're seeing, Tom, is people acting like the Great Depression. They're hoarding their money. They're scared. They're afraid. They don't know what to think. They don't know what the president's going to do. They don't know what the new election's going to do. They don't know what Tehran's going to do with the bomb. They don't know what North Korea is going to do. And what I say is, who the hell cares what any of those people are going to do? What are you going to do? You got to take responsibility for your own financial future. Forget the government. Forget your friends, your neighbors, your family, the church, everybody, and go out there and do something. Everybody has to take responsibility for themselves. And there's never been a better time to get involved in real estate. And the reason's simple. We're able to buy for less than we've ever been able to buy for before in the history of this country based on the trends that we got. Now, some people would argue saying, no, we're back to the 2000 pricing. Yeah, we very well may be, but look at the returns that you can get. Would you rather have your money in the bank being chewed up by inflation at 1%? Not inflation at 1%, the interest that you might be getting in the bank. Or would you rather have it in the stock market and worry about something going wrong somewhere, and then the day you need your money is when it dropped? So people are moving their money into real estate, and it's, America is starting to wake up, and it's a good thing because the foreigners are coming in and they're buying this stuff like it's going out of style.
Yeah. Okay. Well, you can go to your portal at escapecashflow.com. I know that with Escapeartist. And then you've got a lot of great articles. We'll make sure that everybody who's seen this interview gets connected with your newsletter so they can read some of your articles. Just last tip before we go, what would be the top 5 markets you would avoid like the plague?
Well,
how about top 3? Top 3.
I would just say the whole Northeast, and you can start with Ohio, Michigan, Indiana, Illinois. These are the areas that are losing population. And when you think about it, it's really a common sense business, Tom. If you're losing population, who's going to buy those houses down the road? People get sucked into the cash flow of subsidized rent, and again, we'll leave that on the side. But there's nobody to buy that stuff. The key is to buy where people are moving to, because that's what's going to drive values. Avoid the Northeast, avoid the Midwest, avoid places like Baltimore. That's what we do. And
hold on one second. I've got the governor from Baltimore online. Hold on one second. I'll connect you. No.
Hey, we're not trying to knock any. We're not trying to knock anybody's investments, or we're not trying to knock any city or any state, really. But the reality is this is what we do. What I do isn't necessarily right for everybody else, because the truth is you can actually make money in those markets. You're not going to make it on appreciation, and that's how people actually got rich in this country with real estate, was on the appreciation. You might make it on cash flow for a while, but the wild card is typically that stuff up there. Again, that's where the industry started in our country. It's older inventory with older sewer lines, older water lines, or older housing stocks. That stuff is breaking down. The cities and the towns and the counties and the states don't have the money to fix that stuff.
And so what do they do?
They increase taxes, they increase services, they create new fees like licensing landlords or licensing properties. And whenever you see that, licensing landlords or properties, run like heck. Just run in the other direction just as fast as you can. That's no place to buy a house.
Yeah, gotcha. Great. Well, that's some great advice, and I appreciate you taking the time, RJ. This has been an interview that I hope everybody enjoys. Wish you and your family a happy holiday. And 2012, everyone, I think RJ Palano's got your plan for Cashflow properties, and we'll be looking to see great things from you in the next interview. Thanks, RJ.
Hey, happy holidays to you and to your investment success, big fella.
Thank you.
See you later.